One of the biggest challenges that I think us hard work Canadians have, including what I used to struggle with, is that feeling of just being stuck, that feeling of just not being able to get ahead. Now, the major reason is because of what we've done with the money. When we make money, we try to save as much as we can. For the average Canadian, that's about 10%. But the other thing we did is that we borrowed, and they've made it way too easy for us to finance everything we want, from cars to homes to lifestyles, vacations. You can finance anything you want. And every time we finance something, we just look at it like it's another monthly expense because that's how we've been taught to live. So we make money, then we look at how much money we make each month, and then we look at how much we can spend. And at the end of the day, so many people just get that spending part a little bit wrong. We spend too much, then we create too much debt, and then we're trapped. We're trapped in this vicious cycle. It's like a hamster wheel. Why can't we just get off the hamster wheel? Well, it's the same with us. We spend our way to this problem, but we were never taught how to get off the hamster wheel. And to get off the hamster wheel, it's actually quite simple. It's as simple as just where your money goes first. I think the easiest way to look at this is to just look at the statistics. If you look at the statistics, the average Canadian family spends about 30% of their money on interest and fees. And how much of that gets saved? It's 5 to 7%, but it's actually less during recession periods. So now you can get an idea of how the statistics aren't that accurate. Let's say we take $1. Out of that dollar, 30% goes to interest and fees. So how much gets saved? Our biggest problem is that we give away our money. We give up control and we give up too much money and we save too little because we haven't been taught how to keep our money. And that's why we constantly feel trapped in this cycle that we put ourselves in, because that's the cycle we've been taught to be in. Another problem is the lack of education of how money really works. We're not taught about money or budgeting. We're not taught how to make money work for us. Instead, we're just taught how to go get a job and earn money. That's it. So if we know how to make money, but we don't know how to control and keep that money, what good is it? It just puts us back in that rat race of giving up control of our money as we make more. We make money, we spend money. We make more, we spend more. But we don't make money and keep more. No one's taught us to do that, and there's the problem. It's how we're conditioned. That's how we've been taught since a young age. I've failed so many times, but it was that final failing point where I just couldn't take it anymore. I was deeply in debt and I didn't know what I was working for. There was so many things going wrong, but then I watched this video that I found scrolling my phone while I was laying in bed. I remember watching this video and thinking to myself, everything being explained in this video is the total opposite of everything I've been taught. Even when I was a high-level financial advisor, this is still the opposite of everything I was taught. At that moment, I realized something was wrong. I knew that I needed to go learn how money really works. That's when I started going down the rabbit hole of wealthy people, multimillionaires, billionaires, just to find out what they're doing differently with their money. When I learned the secrets and learned how simple it really is, I felt a need. I actually felt a moral obligation to teach as many people as I can how money really works. I'm sure by now you're wondering what makes you the expert. What gives you the credibility to teach other people how money works? First and foremost, I've failed enough times to find out the truth. I've also been a financial advisor for 8 years. I was a high-level advisor, and I've seen the ins and outs and what works and what doesn't work, and I've seen the traps that come along with it. So that's another thing that qualifies me. Oh, and one more thing. I've spent an unbelievable amount of time learning exactly what the wealthy do. I've read their books, I've watched their videos, and I have conversations with them. Conversations about money, which most people have trouble talking about. Most of us are taught, including myself, not to talk about money. We're told when you talk about money, it's considered rude. But all I talk about now is money. And when you talk about money, the truth comes out. So when you ask why I'm qualified, it's because I've done it, I've failed at it, and I've seeked out the truth. I've read tons of books, and most people aren't just going to go seek out that knowledge. Wealth is a tricky word. It can be looked at in many different ways. But in its simplest form, I think wealth is freedom. There can be underlying issues like relationships, personal growth, feeling like you can't reach your dreams, but at the end of the day, wealth is nothing more than freedom. Let's compare a billionaire and a working class individual and what the differences are between them. The billionaire definitely has control over their money and wealth, whereas the average middle class Canadian might have a small fraction of control over their money, and they've also been taught to give up control to somebody else. Now, the billionaire understands how to make their money work for them, whereas the average middle class Canadian doesn't know how to make the money work for them. They think that to make their money work for them, they have to give up control of their money to somebody else, and that somebody else is going to make money for them. But that's the problem, because nobody cares as much about your money as you do. The other big difference is that the average middle class usually works for somebody else. They're not self-employed, so they're not out there chasing their dreams. There's always a cap on how much they can earn unless they're doing sales and earning a commission. But if you look at the billionaire, they're self-employed. Some have several businesses. These businesses are there to serve as another revenue, another ability for their money to be working, because it takes an investment to make money. So they invest in their businesses and it grows their business income. Whereas if you work for somebody else, you can only grow your income based off the amount of hours you put in. And there's only so many hours in a day. So if you limit yourself to time, how can you grow? Now remember, most people spend more than they make. Remember, we make more, we spend more. The billionaires or the wealthy, they make their money work for themselves, and then they go and spend the money that their money makes. That's the difference. So a lot of people have been asking me, what is the capital control system? It's a financial strategy, and it's been around for over 100 years. It's been called many things: bank on yourself, infinite banking, be your own bank. Here at Capital Control Center, we just simply like to call it the capital control system. At the end of the day, it's really just a process that allows a person to take back control of their money. You can maximize its leveraging potential instead of financing large purchases or investments like cars or homes. The capital control system allows you to finance these large purchases and investments without giving up the interest. So instead of giving the interest away to somebody else like the bank or a third-party lender, you pay yourself back with interest and now you become the bank. Let me explain. Most people don't use their savings to buy things. They finance the things they want. But with the capital control system, you'd be using your own funds to leverage against to go and buy the things that you want. But instead of just buying these items and calling it a day like you normally would when we're spending from our savings, you would take the same interest, the same payments that you would normally give to the bank, finance company, or credit cards, and you'd be putting it back into your own banking system, which is your savings. So if you change where your money goes first and you put it into your own privatized banking, that's all the capital control system really is: privatized banking. If you put your money in your own banking system first, and then took that money and then financed the things you normally would in your life, you would change the entire course of your future, because now your money would be working harder, smarter, and more efficiently for you. Another cool thing about the capital control system are its dividends and tax advantages. You see, when it comes to insurance companies, the CRA doesn't consider the dividends a taxable income. It's considered a return of premium. Therefore, as a policy owner, you receive those dividends on a tax-favored basis. If you receive dividends from your stocks, you have to pay tax on it. Whereas in the insurance policies we're talking about, these specially designed whole life policies, the dividends are actually a return of premium, therefore they're not taxed if you do it correctly. So when I think about why people are failing or why so many people are stuck financially, it comes down to why they do what they do. Why are so many people giving up 90% of every dollar they make? It's conditioning. It's what they've been taught. It's what's been drilled into them since they were a kid. I was no different. When we want to go buy something, we just go buy it. We don't think about the impact that monthly payment has on our wealth. And that's why we get stuck, because eventually we realize there's more money going out than what we're saving. It really comes down to that we're not taught on how to create a budget. We give away way too much of what we make, and we weren't taught on how to really keep our money. I think one of the biggest problems with the capital control system and privatized banking is that during our lives we're taught, and the gurus, they preach that life insurance or whole life insurance isn't a great place to put your money. Some of these gurus say that whole life insurance isn't the best investment, and I agree, because it's not an investment at all. An investment involves risk, and whole life insurance is guaranteed. Another reason are the people that are able to teach strategies like the capital control system. They're bank advisors, financial advisors, life insurance agents, but the biggest problem is their compensation. You have to follow the dollar. If you're going to use the capital control system for banking, the person who's writing the policy, these specially designed whole life policies, they have to take a huge reduction in their commissions. So would you give up a large portion of your income to help somebody else with their money problems? The answer is probably no. And that's another reason why this has been kept a secret from the wealthy for so long. How can people not know about the capital control system? If this is such an amazing financial strategy, how is it that not more people know about it? Again, if you follow the dollar, there's not much in it. There's no money for the banker, not for the advisor, and for the professional insurance agent, he has to take a big cut in his commission. So that's why they're not teaching it. It's also a banking concept that's been around for hundreds of years, used by wealthy families, exclusively by big banks and corporations. So why do they know about it but you don't? Well, it's a lack of knowledge, lack of education, and it's your mindset. We've been taught to resist things, which makes it really hard to understand how this vehicle can be used differently than it was designed to. I want you to think of where your money goes. Pretend you have a credit card you're paying 20% interest on. Well, you don't really have to pretend, this is very common. So every month you're making payments to the credit card at 20%, but you're not keeping that 20%. The credit card company is. Now, with the capital control system, because we changed where our money goes first, imagine that we can take the money from our own banking policy and pay down that credit card with the 20%. Now you no longer have to pay your credit card each month, but you're going to continue to make those payments. The same amount that you were giving to the credit card company, now you're going to pay back your own banking system, paying back yourself. How would you like to make that 20% that you were giving away? Well, that's what the capital control system can do. Whatever money that you were normally giving away, it allows you to recapture it using this system. So if you'd like to make that 20%, you don't have to work harder, you don't have to work longer, and you don't have to give up control of your money. You just have to change one thing, and that's where your money goes first, and apply the capital control system to your life. So when I explain the capital control system to people, I'm often told, that sounds too good to be true, or they think it's some type of new concept, but it's not new at all. This has actually been around for hundreds of years, and if you go back into history, there's been many famous people who use whole life policies just like this for banking purposes. Famous people like Walt Disney. In 1953, Walt Disney took a loan from his whole life policy to start Walt Disney World. If you look at Walt Disney and all the wonderful things that Walt Disney has created, it all started from a loan from his whole life insurance policy. And you have to understand why he took a loan to start Walt Disney World. It was simply because nobody would give him the money. He got turned down by every single bank, and he had no money himself. So when no bank would lend him money, he then realized that he actually is the bank. So he then took a loan from his own bank and started Disneyland. Do you know who else used this system? James Cash Penney, aka J.C. Penney. You know, the department stores. In its prime, they had over 840 locations. This was no small business. This was a massive company. If you look at history, J.C. Penney went through some hard times during the Depression, along with many other people who went bankrupt and had to walk away from their dreams. But J.C. Penney, he didn't have to walk away from his dreams because he had a whole life policy. He took loans from that policy so he can pay for things like his payroll or day-to-day expenses, and that's how he got through those hard times. It eventually turned into a massive company. He did that with his whole life insurance by taking loans during these hard times. You see, whole life insurance is one of those places that's tried and tested to put your money. Even during the Great Depression, J.C. Penney was able to access his cash value that hasn't changed, it didn't go down in value, and it definitely didn't go bankrupt. These giant mutually owned insurance companies like the one J.C. Penney used during the Great Depression are sound financial institutions, and J.C. Penney proves them. Let's go a little bit further back into history, all the way back to the 1800s, and somebody that we all know. The Rockefellers. Now, you've heard about the Rockefellers, you've heard about the Rockefellers' fortune, and you've probably heard of John D. Rockefeller. John D. Rockefeller was one of the richest men of his times, and the Rockefeller family is still one of the wealthiest families today. So how did they do it? How did they make it through all these hard times? Rockefellers and other wealthy families, They understood that using dividend-paying whole life insurance policies allowed them to grow their money, use their wealth to fund ventures, and protect their assets. It also allowed them to create generational wealth and protect their future generations. Understand that when the Rockefellers had all this money, it wasn't about making more money, it was about keeping and protecting the money they already had. So where did they go? They went to giant mutually owned insurance companies because it was the safest place to park their money. Lots of people say that the Rockefellers and other wealthy families like the Rothschilds started the banking concepts that we know today. One thing they can definitely be quoted with is starting family privatized banking systems. They did this using the same thing that we use that we call the capital control system. Now let's jump to the 1960s. There was a restaurant called McDonald's owned by the McDonald brothers, and then came along Ray Kroc. This is actually one of my favorite stories using this strategy. Ray Kroc bought out the McDonald brothers and brought McDonald's to where it is today. But there was financial struggles. The character Ronald McDonald would have never existed if Ray Kroc didn't take policy loans from his 2 whole life insurance policies. It's also well documented that Ray Kroc took loans from his whole life policies to cover payroll during difficult times of growth. If Ronald McDonald and the McDonald's chain used whole life insurance policies for their banking, how can this be too good to be true? This is well documented and all the research is there to show that this is how it's been used throughout history, and McDonald's wouldn't be what it is today if it wasn't for whole life insurance. Now you all know Warren Buffett, Berkshire Hathaway, and how Warren Buffett is a huge fan of insurance companies. So much so that in 2010, Warren Buffett claims that purchasing Berkshire Hathaway was the biggest investment mistake he's ever made. And he claimed that denied him compound investment returns of about $200 billion over 45 years. He claimed if he had invested that money directly into insurance businesses instead of buying out Berkshire Hathaway, the return on those investments would have turned over hundreds-fold. So if Warren Buffett loves insurance companies, why are we not taught to use insurance companies? Throughout history, so many famous and wealthy people have used this strategy, it kind of makes you wonder why people would think this is too good to be true when so many people throughout the course of history have used it. So when I learned this information and started applying it to myself to fix my money problems, I realized I need to help other people do this too. It didn't seem fair that I have all this information and other people didn't, so I felt obligated to teach and mentor people on how this works. Along with that, I aim to be Canada's #1 money mentor, and that comes with major commitments. Commitments like now having to go out there and teach all of Canada how to take back control of their money, how to get the money back from all the large purchases that they're going to make in their lifetime. And also, I have to do this knowing I'm going to make less money doing it this way, because that's the truth, and sometimes the truth hurts. So in this video, I showed you the history of this concept, the greats that used it, the wealthy that used it, and how you can use it. We covered a lot of topics, and I'm sure you have a lot of questions. For most people, this is a new concept, and I want to make sure that I can answer your questions. So please drop your questions in the comments below, and if you have any suggestions for future videos about the capital control system. You can also reach out to me personally if you want to have a discussion about how we can maybe help fix your money problems. I hope you enjoyed this video and learning about the capital control system, but now it's time for you to decide what the future looks like for you. Please like, share, and subscribe if you got value from this video. And if you want to see future videos, just hit that notification bell. I'm Brad Bidner. Stay financially empowered, Canada.